Markets are ripping higher, bulls are cheering, FOMO is everywhere. But there's a problem. When everyone agrees the pain trade is usually around the corner, is this another bear market rally or are the bulls truly back? In the next 48 hours, everything could change. Let's dive in. The big news over the weekend: China and the US moved to ease trade tensions early Monday, agreeing to a temporary 90-day reduction in reciprocal tariffs. The stock market loved it. And technically, we're actually above a key level that I felt had a very good chance of being strong overhead resistance. Now, should we go and change the bull to a bull narrative because of a breakout like this on this type of announcement? Does it change the recession narrative? Does it change economic slowdown? Does it change the impact of tight monetary policy? Do any of these things suddenly change because they've agreed that 90-day period of temporary agreement is somehow changed the entire storyline? I say no. But the question we have to really look is technically what happens here, because the bulls are obviously trying to get everyone excited on the upside. And so this type of a bull breakout is going to be really important to watch the next 24 to 48 hours to see whether or not the bulls can follow through on this. The one thing that would actually put a nail in the coffin on this is if by Tuesday or Wednesday we've given back the entire rally. And so the question then becomes, on the short term, what will happen? We're recording this before the market open, so we haven't yet seen which stocks, which sectors, what is driving it. Is there going to be follow through? All of these puzzle pieces we're going to solve, and we'll be watching over the next couple of days at Big Picture Trading. So what are the other impacts? Now, look, first of all, if this is for a breakout for real, and our existing narrative of a resistance along these 5,800 highs is proven false, the measured move on the bull upside is a move all the way for a double top retest on the upside. So you can see this projection, and we have seen in the past major market tops have key top retests. Now, I'm not already calling for that, but that is the no-brainer target if 5,800 isn't the resistance point, and if the market isn't giving it all back in the next 24 to 48 hours. If this has started a positive feedback loop, then suddenly we'll have to entertain the idea that a double top retest is entirely on the table. So let's look at the other markets. Let's start off here with the dollar, which is up almost $1.25 on this rip. We were talking about a retracement back to this 101, 102, and here we are, a direct test of the 50-day moving average, a exact Fibonacci retrace. Again, a critical moment to find out whether this is actually just a retracement or whether this announcement has somehow changed the landscape. This is actually a very shortable moment. Not that it's always guaranteed to work, but the asymmetry exists where one can manage a very small risk and stop loss and be short selling the US dollar, going long the euro or long the yen off of these types of levels. On other markets, I just want to highlight Bitcoin still holding at overhead resistance along previous highs. We're going to watch to see whether that is where all of the short-term highs come in. Logical place for it to pause. That doesn't mean it has to be a major top or major crash, but maybe even a pause and reversion back to a fib zone just under 100,000 as the 50-day moving average catches up is a very typical thing to do along overhead resistance. Think of, let's say, the way the market paused along after about a week or two of price action after retesting these previous highs back over here. Let's move on to the other precious metals. Gold down $111. We find ourselves in a situation where the 3,300 level did not hold. That was this fib zone we were talking about. With this breakdown, that puts the likelihood that gold is putting in a double top as a much greater probability. At this stage, we're going to approach this 3,200 level where the 50-day moving average and the fib retracement zone lies, and this is going to be where we're going to get a big tell, because if this 50-day and this fib zone do not hold gold, then we're just going to see a multi-month second quarter market correction, which is a correction that will last a month or more, probably into June, and we'll probably see as low as 3,000 on the downside. Is that yet the path of least resistance? No, but we are right here at 3,200, 50-day moving average, fib zone. We're going to find out very quickly whether or not this gets bought on dip or whether or not there's going to be follow through selling. The just touching on crude oil, taking this very bullishly, up $2 and change, again up to a 50-day moving average. The key here is that this is the first bullish price action we've seen on crude oil. It cleared that $60-$61 fib zone down below, increasing the likelihood that this is going to be a double bottom on crude oil. And so as we approach this 50-day moving average and this previous high, this is going to be where we're going to get some really important information. If crude oil in any way starts consolidating in the mid 60s and showing no active distribution, then inevitably some point in May we're going to get the bull breakout signals that are going to be indicating a turnaround. Does that, to me, all of that happens above this 50-day moving average. Are we above the 50-day moving average here yet? No. But first really good day on the upside of crude oil to get things going. We need to pay attention to this market move. On other fronts, natural gas continues to look like a bull breakout. We're using the UNL here, which is the 12-month strip, so we remove some of the seasonality of natural gas. But this continues to look like a breakout potential for further upside. As well, we got uranium, the U308, above $70 on spot prices. This is now a week or more of consolidation of uranium prices above the 50-day. This is potentially bullishly constructive, and we're going to watch to see whether there could be further follow through on the upside. One of the things that we saw, let's go move on to interest rates and bond markets. What we saw here was a pretty significant drop in the SOFR futures, as essentially everyone is pulling recession risks out of this market. Somehow this kind of a potential trade deal between or alleviating all these stresses suddenly has made everyone feel that the risk of recession and rate cuts being needed has diminished. I mean, as you can see over here, we've now seen the recession risks drop to about 44% from the poly markets. And so what does this mean? Well, again, we only are seeing first reactions, and I refuse to flip-flop on our bigger thesis until we see whether or not this sets in motion some new prevailing trends, and a few hours of trading was not enough information. It's going to be a very important 24 to 48 hour window to really see how all of this settles in. When we go to that long bond, not as big of a reaction on it here, and so it definitely still looks relatively weak. The rally here in the long bond failed at the fib zone. It's breaking down. Is it plausible that we are retesting this low in the coming days or weeks? It's the path of least resistance at this moment. There isn't too much to say bullishly on this front. And just finally, some global equity. You can see the Nikkei still advancing back toward undoing much of the selling in a very clean V-shaped recovery. The Euro stock almost back to its previous high. We clearly have a very bullish market price action. The bigger question, can you trust it? And is this for real? Like, do you go and just buy something because of the fear of missing out? even if this is a new bull phase and we have to change our narrative to being more bullishly tilted, which is not the case right now. But even if we did, you need to buy dips, not rips. And we rarely will go and chase a market like this without seeing some sort of an opportunity. So we'll keep you all up to date in the coming days. Thanks, everyone.